something that I wish we had done today. Turn with me to question 9 in chapter 20. This may be the way I get the point across to the whole group on Monday about the importance of this thing that you might otherwise overlook. Obvious, not so obvious. Question 9, page 894 says, Tony is confused about the source documents used in assigning materials and labor costs. Identify the documents and give the entry for each document. I'm not going to do that. I did that already today. I'm trying to set the stage. I'm trying to finish the thought that I began earlier today. Do you recall we had a long list of source documents. We made some journal entries. We talked about the source documents already. Yes or no? Yes? Now, what I want to do is take a quick journey, a quick flip through the textbook and find these things and just read a teeny bit about it to show you how many times you've overlooked this. I was hoping to raise your awareness level today. I don't know whether I have or not. Let's see whether I have. I'm trying to find self-study question 4 in this chapter. Self-study question 4 is right here off the page. Can you see on the screen? Yes? Where am I pointing? Right there, still off the page. You turn there. It's page 893. Self-study question 4 says, the source documents for assigning costs to jobs. The authors brought it up. I didn't bring it up. Turn with me to E20-2. E20-2, we worked in class today. We began this review session today with, we use a job order cost accounting system. Here are materials requisition slips mentioned. Here are labor time tickets mentioned. The instructions themselves say, we apply, prepare a summary journal entries to record the requisition slips and the time tickets. Today, we started out the day talking about source documents. Turn with me to E20-6. E20-6, we worked together today. It was all about that job order cost sheet, and that's where we discovered source documents and answered the questions about it. Turn to E20-7. I called it to your attention after we did that. Purchase raw materials on account based on what piece of paper? Invoice, receiving report. Raw materials were requisitioned. Materials requisition. Here it says so, right there. Materials requisition slips. Factory labor cost incurred were. That's time cards. Read 4. Time tickets indicated that. Do you see how the source documents have been mentioned all along? Don't they seem more obvious now that I'm pointing them out to you than they did when you were just blowing by? 20-3A, you worked as a homework assignment. 20-3A is divided between job cost sheets, materials requisition slips, and time tickets. Do you see those words leaping off the page at you now because I raised your awareness level? That's not why we stayed and came back after the break, but I wanted to mention that to you. It's mentioned lots of places. Turn with me to question 14 on page 894. Page 894, question 14 says, what are the relationships involved in computing a predetermined overhead rate? We've talked about it today already. Can you give me the shortened version of the long obligatory description I presented to you at the beginning of this thing? I had a whole bunch of words in the numerator and a whole bunch of words in the denominator that all boiled down to one word. of importance in the numerator and one word of importance in the denominator. Jonathan, do you know the words? You had your hand up.
I was going to say it a different way.
Say it to me, Paul.
Overhead divided by activity.
Overhead divided by an activity. You need to know that. We've covered it today already. That's not why we stayed a little longer. I'm just trying to lay the foundation. Overhead divided by an activity. So, Tucker, can you turn that off and turn it back on in a second? Manufacturing overhead story. And I didn't want to have to repeat it all without some stimulus that would remind you that we've been here today already. We talked about how overhead pertains to the whole year and how we make an estimate at the beginning instead of waiting for actual cost at the end. And then we decided that dividing by 12 wasn't a good idea, that it would be a better idea to divide by an activity. And we named the possibilities and we went off down some other tangent. We came up with the formula that I just heard Paula repeat for me. Overhead divided by an activity. There's something else you need to know about overhead. If we think about manufacturing overhead as it compares to income summary, gain and loss on realization in the partnerships chapter, or the variances in the chapter that we just completed this last week, they have similarities, but they're different. Factory labor. Let me make that list. Factory, let's see, income summary, factory labor, any of the variance accounts, and maybe some others, are all accounts, manufacturing overhead, all accounts that we gather up information and that we allocate it someplace else. What happens to factory labor? Ultimately, the balance of factory labor is
zero.
We debit it for some things, we credit for some things, and it wipes out. What happens to income summary?
Zero.
It zeroes out. How about manufacturing overhead? We debit manufacturing overhead with
Actual.
actual, and we credit manufacturing overhead with
Applied.
applied. What are the chances they're going to equal and it's going to zero out? Pretty small. I mean, that we would get the estimate exactly right, whew, boy, that'd be a stretch, right? So, I'm building a case for, I'm leading to the conclusion, what are we going to do with manufacturing overhead? We need to decide what to do with manufacturing overhead at two different points in time. What are we going to do with manufacturing overhead monthly? And what are we going to do with manufacturing overhead annually? And it's been mentioned. But I think it's the conclusion that wraps it all up. What do you need to know about manufacturing overhead? You need to know why we're doing it. You need to know how we're doing it. Overhead divided by an activity. You need to know how we're doing it. Debit, work in process, credit manufacturing overhead for an amount. How do you get the amount? You take the rate that you determined in the previous step and you multiply it by something that you have to go someplace else and find. Ooh, this turned out better than I thought it was going to. I'm going to do that one again. So if you base it on labor, you have to go find the amount of labor that month and multiply it by labor. So if you base it on machine hours, you have to go find the amount of machine hours that month and multiply it by machine hours. We did that today. That's the amount of this entry. Debit, work in process, credit manufacturing overhead. Then what do you do with manufacturing overhead at the end of the month? What do you do with manufacturing overhead at the end of the year? That's the whole package. That's the, let's wrap it all up. Let's put it all on one piece of paper. Let's think about it from start to finish. From the time we decide on the estimate, all the other activities until we finally zero manufacturing overhead out at the end of the year. On which financial statement does manufacturing go at the end of the year? Neither. It's a trick question. It does not appear on an annual financial statement. It serves us all year long. And when we're finished with it, its balance should be zero. So, I'm getting there, and I'm letting the book lead me. Turn with me to question 17. On page 894, question 17 says, Jeff is confused about under and over applied. Under-applied and over-applied manufacturing overhead. Define the terms for Jeff and indicate the balance in manufacturing overhead account applicable to each. It's logic. It's something you could do. It's relational. One's larger than the other. It makes sense. That's why we chose those words to describe them. What's the relationship between actual and applied that would cause us to conclude it was under-applied? May I have a person who would talk to me right now? Whit?
Under-applied manufacturing overhead would be like if there was ended up being more overhead during the month than what we thought there would be.
The actual was greater than applied? Is that what you just said?
Yes.
Actual is greater than applied would cause manufacturing overhead to be debit or credit? I think it would be a debit. You and I played the hangman game twice, the little thing I put up there a minute ago. Remember that?
Right.
We debit manufacturing overhead with actual or applied?
Applied.
We debit it with actual. And we credit it with applied. Is everybody in one accord on that? We debit manufacturing overhead with actual. Now, we're going to use Whit's example. He said the actual costs were greater than the applied cost. Would that cause manufacturing overhead's balance to be debit or credit? Say something. That would cause it to be debit. A debit balance in manufacturing overhead is over-applied or under-applied. You need to think first. Be quiet for a second. A debit balance in manufacturing overhead is over-applied or under-applied. Say something.
Over-applied.
A debit balance means that actual was more than applied. I think that's under-applied. Am I thinking wrong? That's under-applied. You didn't apply as much to production as you incurred. Whit made up the example. It's under-applied. I think that's the definition of the first one.
Oh,
When
yeah.
actual is more than applied, will the balance of that account be debit or credit? Say
Debit.
something.
Debit.
That's a debit balance. A debit balance in manufacturing overhead is under-applied. Now, let's pretend we didn't have that conversation. Let's try, even though we've already experienced it. It's hard to wipe out that experience. Let's try, let's pretend, and make up an example other than that. Actual costs were $10,000. Applied costs were $11,000. What's the balance of manufacturing overhead right this minute? Debit or credit? Credit how much? Credit 1,000. Is that over-applied or under-applied? Speak up. That's over-applied. A credit balance in that account is there because applied was greater than actual. That's over-applied. Now the question comes, what do we do with that account monthly, and what do we do with that account annually? Look at 18. At the end of the year, under or over-applied overhead is closed to income summary. Is that correct? If not, indicate the customary treatment of this amount. I'll reformulate the question. What do you do with manufacturing overhead annually? Well, on another slide, I said, what do we do with it monthly? In chronological order, perhaps we should entertain that thought, that question first. What do we do with manufacturing overhead monthly? The answer is we carry it over, and carry it over, and carry it over for 11 months because it's working itself out. Some months it may have a debit balance. Some months it may have a credit balance. If we're close to our estimate, we shouldn't be stockpiling. We shouldn't be going one direction and just getting deeper and deeper and deeper into that hole. It should be close. Monthly, how do we carry it over? If required to prepare financial statements monthly, where would we show manufacturing overhead? Monthly? Does it go on the balance sheet or the income statement? These two guys on the front row said neither because they remember that I asked a question similar to this earlier today, the answer to which was neither. That question was about annual financial statements. This question is about monthly financial statements. The answer is not neither. It either goes on the balance sheet or the income statement. And I've presented this, and I hope you experienced it someplace else. And I offer you two reminders. This decision tree, which answers the questions that I'm attempting to present right this minute, and this handout that's available on the class website, which is a quote from the 7th edition of this book that got edited out in the 8th edition. But I still want to talk about it. So I'm providing this for you on the website, or I have a few left over if you would like to take one of these as you leave and have a hard copy to read it. You've probably got this half-sheet handout in your notes someplace. One of the reasons I asked you to stay a little longer with me today was to make this point. What do you do with manufacturing overhead monthly? Well, on a monthly basis, we carry it over by putting it on the balance sheet. When we put it on the balance sheet, it goes among the assets or the liabilities depending on its balance. That little half-sheet handout that I had in my hand a moment ago that I gestured with reaches these conclusions. We're preparing monthly financial statements. It depends on its balance. I will have a hard time talking you out of writing down these. These are book's terms. I'm going to give the explanation that goes with it, which I believe would be better. One of these days I'll redraw that decision tree and put my own words on it and be more content with it. It goes on the balance sheet. If it has a debit balance, it goes among the assets. If it has a credit balance, it goes among the liabilities. If it has a debit balance among the assets, it would be listed among the assets where the prepaid expenses are listed, like prepaid insurance, supplies, and a debit balance in manufacturing overhead. We carry it over. If it has a credit balance, then we put it where other credit balances are on the balance sheet among the liabilities. It's a deferral. It's a cost that's going to be allocated to the future. It's a deferral either way. Prepaid expenses are deferrals. Unearned revenues are deferral. We put it where other deferrals are. We put it where unearned revenue is. So would manufacturing overhead with a credit balance. Now, if you read that decision tree without this explanation that goes with it, and you answered somebody else's question, you would say manufacturing overhead is a prepaid expense, or manufacturing overhead is unearned revenue, neither of which is true. The full explanation that went with this is it's like those. It goes where those are reported. It goes on the balance sheet among the debits, among the assets, or among the credits, among the liabilities, depending on its balance. That is monthly financial statements. We carry its balance over. The question in the book, 18, at the end of the year. Now we're talking about annual financial statements. The decision tree covers that too. On annual financial statements, where we put it, what we do with it, depends on whether it's large in proportion to other things. Too bad that is the word material In the manufacturing chapters, we've heard raw materials, direct materials, indirect materials, materials running out the wazoo. And this has nothing to do with any of those. This concept of material is size. Is it large or small in proportion to other things? Another word we say a lot professionally is materiality. Materiality is a big concept in the accounting world. Is it large or small? Are we making a big fuss over this? Or can we ignore it without dire consequences? If this is small, if you got close to your estimate, rejoice. And move all of this little, tiny, small, insignificant amount to cost of goods sold. I'm tempted to rewrite the flow of cost through the accounts. In the interest of time, I'm choosing not to. But raw materials became work in process, that became finished goods, that became cost of goods sold. If we misstated this just a teeny bit, it's probably mostly in cost of goods sold. Just dump it there. The decision tree says that. However, if we introduce this into the work in process account in a significantly wrong way, if it is material, think of the accounts that are wrong. We introduced it in work in process, so whatever's left in that account's wrong. Whatever's been transferred to finished goods and is still in finished goods is wrong. Whatever has been transferred to cost of goods sold is wrong. How happy are you with your performance right this minute? We loused this up pretty bad. Don't you think we ought to try to fix it? Then we ought to prorate the balance of manufacturing overhead that's wrong to all the accounts that would be affected by it. You're not responsible for the math to do the proration, but you might be responsible for the concept, the idea here of what we're trying to accomplish. If it's small, put it in cost of goods sold. If it's large in proportion to other things, then transfer it to the appropriate accounts that were affected by that material misstatement proportionately. May I also recommend to you, highly recommend to you, exercise 20-5. Let me see if that's the one. 20-5. I worked in all my discussions and I embellished it. It's not like it was in the 7th edition. I tried to make it like it was in the 7th edition. And you could rework it if you've seen it. If you haven't seen it worked, it's all available on the class website, and it would be good for you to practice that, especially to piggyback and connect with the discussion that you've just heard. I said these things that I've just presented, when I worked exercise 20-5 with you. I reviewed them just now with you. Some of you felt as if they were new. Have we answered the question as the book posed it for question 20? Let's glance. Question 20 says, where does it go on annual financial statements? And there's my answer. On monthly financial statements, it goes on the balance sheet among the expenses or among the revenue, depending on its balance, just debit or credit. The question in the book was, where does it go on an annual financial statement? Is it closed to income summary? That's the question that was asked in the book. I ask you now. Is it closed to income summary? Yes or no? No. What do you do with manufacturing overhead on an annual financial statement? Does it go on the balance sheet or income statement?
Balance sheet? Not either.
I thought I told you the answer wasn't neither.
Annual's neither.
Thank you, Jake. Thank you, Sam. If it's small in proportion to other things, it goes to cost of goods sold. If it's big, it's prorated among work in process, finished goods, and cost of goods sold. Do you understand a little bit of that anyway? Read what our book says about it. But read what the 7th edition says about it. And you might understand a little bit better. It's always nice when you are introduced to it verbally, but you read the author's words and have it reinforced, and to have them agree with the presentation that you are starting to understand because I told you about it, that you would understand it better because of that. Do you have a question about anything I've just talked about? Is there something else you'd like to talk about? That was the reason I invited you to stay a little longer. Sam, you satisfied with that?
Yes, sir.
I've saved some things that are going to be good in class on Monday. You could help me by helping us go faster Monday because you saw some things similar to them today. You understand them better.